Good afternoon, everyone. Hopefully I'll excite you with this presentation, get everyone's attention. I'm Aswin Plapongpanit, CEO and founder of D-Money. Just to give you a small background, I'm a serial entrepreneur, set up more than 10 companies in the last 20 years, most of them bootstrapped and profitable. That's my model. D-Money is no different, going in the same trajectory. It's one of the first profitable fintechs in Thailand. We have a total of 4 licenses by the Bank of Thailand, so we are a local fintech player with e-money license, money transfer license, money exchange license, and e-payment license. Giving context, last year we were the largest cross-border non-bank in Thailand in terms of processing volume. So we have achieved a big milestone in the last 4 to 5 years since our inception. Giving a little background about this story, I was actually talking about the topic of using digital assets before starting up D-Money, funny enough. Looking at a player in Philippines called CoinsPH actually during those times, and seeing that they're actually doing something very, very interesting, and BitPesa, if any of you have heard of that, in Africa. So 5.5 years later, we're talking about the same topic actually, but in a bit more of a twist. To give context, this is basically giving you an idea of where Thailand sits in the global map of cross-border payments, remittances, and volumes. So in terms of transaction value that comes in terms of remittance, it's approximately $17 billion a year. It happens to be in the top 15 remittance corridor of the world. So definitely not in the top 10 yet, but I think that's going to change with our new government. Hopefully we will reach there. But definitely on the top inbound countries of receive. In terms of e-commerce plus business payments plus trade payments, this figure of 464 billion is what is provided. It is actually expected or been discussed that the volume could be 3 times of this amount. So this is the, I would say, published figures. In terms of the global market, it's $23.5 trillion in terms of money movement that happens globally. So I don't think anyone can ignore it. It's such a big part of every merchant, every business, every individual. We all think about how money is moved. If we consciously talk about it, we probably use one of these services consistently, probably every month, either to pay, either to send, either to receive, either to spend. So we are all active participants to this wonderful number of $23.5 trillion. In terms of revenue, it generates around $120 billion for companies like D-Money and banks, of course, being a large player, who are the main institutions that are probably recognizing this revenue at this point. FinTechs are catching up. As a problem statement, it takes around 2 to 3 days, which is what we're talking about right now as an average, to move this money globally. So, and it's very expensive. The global average happens to be approximately 6 to 7%. So that's a pain point, that's a problem statement. So where are we going from here? It's clear that there is a technology, which we're going to see in the next slide, getting into mainstream. And I think the audience here is probably very well aware about stable coins. But for those that are not, just to give a little background on stablecoin, it is a digital asset that is pegged to a real asset. Hope that's not too complicated. So a real asset is what? It could be fiat, or our currency. Whether it's Thai baht, whether it's US dollar, whether it's euro, it's backed by fiat, 1-to-1. However, there are other creative stable coins that are happening around the world that are pegged to gold, pegged to agriculture. I just saw one recently called AgroCoin, or even commodities. So some real world asset that is backing and pegged to this digital asset. By having that, there are lots of new creative solutions that will take place, which we're going to see, making the asset far more frictionless, easier to move. 24 hours a day, you can actually have control of this asset. You don't need to be relying on a bank or a financial institution to actually move this asset. You're in control of it. So I think it's something that once you use it, believe it or not, you will see the advantages really clearly compared to traditional money transfer services that are still running on fiat or SWIFT or traditional APIs connected to local switches. The time is here by saying that these global giants have adopted the technology and are going mainstream with it. I think all three of these announcements are 2023 from what I have confirmed. So these are companies, brands, financial institutions of very large sizes, probably the top in the industry, that have all announced the adoption of stablecoin in one form or the other this year. So I think we're at a turning point. Very clearly, for regulators globally, it's a wake-up call. It is a call to show that the technology has arrived and customers are ready to adopt it and financial institutions are ready to enable it. Very quickly, I will just tell you what the quick use case for each one is. With Visa and Circle, they're looking at it as a settlement for Visa card issuers to settle USDC, reducing cost and friction, and of course being able to do this 24 hours and 7 days. In terms of PayPal, they have white labeled a solution from Paxos, which has created their own version of stablecoin called PYUSD, and they're looking to enable 400 million wallets who are PayPal customers globally to send PYUSD between them. So there will be use cases for merchants, there'll be use cases for P2P, personal transfers, and a lot more that actually is coming around. With MoneyGram and Stellar, I think it was just 2 days ago. This news is pretty new. It's a non-custodian wallet that's going to be issued in the quarter one next year, 2024, allowing customers to actually hold currency, so they can actually hold USDC, and they're using Stellar as the blockchain layer for that technology. So if I heard correctly, MoneyGram is tuned to be the global ATM for USDC. That was the terminology I heard, and I thought it was quite interesting. So technology layer being USDC and Stellar, MoneyGram with having the vast network globally of cash in, cash outs becomes the global ATM for this technology. So clearly, guys, it's here and it's coming fast. I went through this very quickly, but just giving some numbers behind where we are. At this point, we're at around, last year, $11 trillion in terms of what was transacted on stablecoin. Just to give you some context, that was equivalent or a little bit more than the Visa network's entire settlement volume. So giving context, it is quite large, and it is actually gaining momentum very clearly. The two largest stablecoin players globally are USDT and USDC. USDT holding around 60% of the supply of $125 billion in terms of the current supply that exists. That number was just 1/5 5 years ago. So we have seen a 5x growth in terms of US US pegged stable coins in the last 5 years. So there's a prediction that in 1 year we're going to see that growth again. So that's the kind of exponential growth that's happening with these giants on. You can well imagine the volumes that will actually come around on the stable coin. This is just to show you pairing. So once you have a stable coin pegged to a particular currency, the opportunities are endless. You can have multiple currencies. And I believe USDC now has a euro pegged currency already. So you will see more and more of this happening. Perhaps a Singapore dollar base peg, or even more of these coming around. So you will see probably the G10 countries issuing and having this technology probably as the first mover, creating pegs as well as cross-currency pairs, which reduces friction, time, and speed very clearly. Another exciting news, in case we have guys from Singapore here, this may be something you're already aware of, but Singapore just announced their stablecoin regulatory framework. And I think it's when Singapore does this, all the other regulators in Asia actually start looking at it and being inspired. So thank you, Singapore, for taking this wonderful step to actually find a way to make this framework take shape and bring it mainstream for fintechs and blockchain technologies to adopt, and enablers, whether it's payment companies, whether it's money transfer companies or card issuers, the list goes on, or whether it's wallets, all of them will need a regulatory framework for the stablecoin to actually be issued and used. So this has happened now, it's been published. So as a criteria, there are 3 main criterias in the regulatory framework. I won't bore you, it's a few hundred pages. But the take-home message is it's got to maintain very high liquidity. It's got to be 100% backed by real assets, fiat being one of them, government bonds or other types also being discussed. Again, G10 countries and Singapore dollar being addressed in this framework. And the issuers are obviously looking at financial institutions to be the first adopters for that stable coin. So it's an infrastructure layer that is a highway to be created for all the enablers to actually run on it. So it's a very first and initial step, but a very important one. Thailand, just to give perspective, has participated in a project called M-Bridge, or MCBDC Bridge. I believe it's in multiple jurisdictions, and around 20 financial institutions were part of this sandbox, or let's call it POC. This was taken in last year during August to October of 2022, and 4 to 5 banks participated in Thailand, and they processed around $22 million in terms of volume between participants of the M-Bridge using CBDC technology, which is a government-backed stablecoin. The whole idea was it was done without corresponding banks. Yeah? So they created bridges directly between governments without having to use corresponding banks. So this is another flavor of stablecoin. I believe as a fintech player like D-Money, we're going to just have the advantage to choose multiple products, multiple technologies and services that will be adaptable for our customers. So giving perspective, if we were in an airline business, whether we're using Boeing or Airbus, it's a choice. These are technologies that will enable customers of ours to basically move money frictionless, faster, and better. So on one hand, the developments happening on a CBDC level. On another hand, it's also happening by blockchain companies or even companies like Circle that are issuing USDC and setting up in Singapore to enable these technologies across Asia. So we're at a point where it's kind of like best of both worlds. D-Money has basically all the traditional licenses that would exist and is at the cusp of testing and trying out these technologies under a sandbox with a regulator on stablecoin settlements for cross-border payments. We will have a lot more research paper and information on this. Since it's a very early stage of the project, I will only say that in the very near future, our customers will experience digital settlement using digital assets by stablecoin to multiple countries in and out, allowing customers to actually transfer real-time transactions 24 hours a day, 7 days a week in real time at high volume and at high velocities. So that's what the technology allows us to do. So we see it as the best of both worlds, traditional as well as the new digital asset world. Very clearly, possibilities are endless. We are just starting this journey. As we said, it's 5x growth in 5 years, probably 5x growth in another 1 year. So with the giants on, D-Money happens to be one that is adopting this technology as well and at the cusp of testing it with the Bank of Thailand. So thank you very much. If there are any more questions, we're happy to address them later after this talk. Thank you.